Thank you, everyone, and welcome to today's presentation. We're very pleased to have you here. My name is Sam Dechtman, and I'm a certified financial planner and wealth advisor here at Dechtman Wealth Management. And today, we're going to talk about how to get the most out of your Social Security benefits. We'll be going over a lot of information, so to help with your note-taking, I'll be emailing everyone a recorded copy of today's webinar and a copy of the presentation slides. Every attendee will also receive a copy of our free guide, 4 critical Social Security facts retirees must know. We are going to try and move quickly through the information, but please bear with us. We wanted to give you a very comprehensive presentation, so we're going to try and keep it light and interesting. In addition, if you have any questions throughout the presentation, please type them in the question box, and we'll do our best to get to them all during our question and answer segment. You can find that at the bottom of your monitor. There should be a little box that says Q&A, and feel free to type those in again at any time. After today's presentation, we will automatically be routed to a survey. We love your feedback, so if you could please participate, that way we know what webinars you all would like to hear from us in the future. All right. Now some disclosures. Okay, we're done there. Great. And for those of you that are not familiar with the Dechtman Wealth Management team, we're located here in Denver, Colorado, and we have 7 members of our team. We have a shared mission to help achieve clients' financial success through transparency, integrity, and devotion. We view our clients and our team as one big family that takes care of one of each other. Our small office aims to be the place where everybody knows your name, and we really do take that to heart. Another quick 30-second commercial, who we are. Since 1984, we have always acted in the best interest of our clients and held ourselves to a fiduciary standard. Many clients trust us with their entire life savings. We do not take this responsibility lightly. As a nationally recognized investment advisor in the Denver wealth management community, we're focused on providing clients with comprehensive wealth management services. Our team of professionals are here to help you with every need. If you have any questions regarding any wealth management services, which includes investment management, financial planning, estate planning, tax preparation, Medicare planning, or Social Security analysis, we're able to help you out and speak in a common language that you understand. All right, thanks for sitting through that. Now we are on to the presentation, and we're going to cover a few topics today, and all of which are designed to give you a brief overview of Social Security benefits. We'll also be discussing recent changes to Social Security. A proper place to start is with a little history. President Franklin D. Roosevelt signed the Social Security Act in 1935. The first lump sum payment was made in January 1937. Ernest Ackerman was the first person to collect his benefits, a whopping 17 cents. Regular ongoing monthly payments began in 1940. May Fuller was the first to receive monthly payments in that year. She was 65 years old, and she received benefits until she was 100. The Social Security Administration began adjusting benefits for inflation in 1975. In 2000, the Senior Citizens Freedom to Work Act allowed retirees who had reached their full retirement age to collect their full benefits even if they were working. Congress voted in 2015 to eliminate some advanced claiming strategies, which we'll get into more detail later. So, what is Social Security? The Social Security Administration oversees a number of benefit programs. However, we're only going to talk about retirement benefits today. In the simplest terms, Social Security is a government-sponsored retirement benefit designed to replace some of your income while you're retired. If you've worked and paid taxes on your income, you've been paying into Social Security for most of or all of your career. As a retiree, you can look forward to reaping those benefits for the rest of your life. Social Security is a major source of income for most retirees, and on average, retirees depend on the benefit for about 1/3 of their income in retirement. All right, now let's move on to Social Security 101, where I'll give you an overview of some basic knowledge. Most Americans receive Social Security by working long enough to qualify for personal retired worker benefits at age 62 or later. However, if you're a spouse of a retired worker, you may also qualify for spousal benefits now or in the future. If you're divorced, you may also qualify for benefits if the marriage lasts at least 10 years and certain other conditions are met. If you are the widow or widower of a retired worker, you are probably eligible for Social Security survivor benefits, which we will get into later. There are several other categories of eligibility which involve minor children or the disabled. We won't go into those matters today. If you think that you may qualify based on some of these less common factors, please contact me after the presentation so we can review your specific situation. All right, how are benefits calculated? In order to qualify for Social Security as a retired worker, you must have worked for at least 40 quarters. Now, your babysitting or lawn mowing jobs don't count, unfortunately. To qualify as work, you must have earned reported income and paid Social Security taxes on it. The size of your benefit in retirement depends on how much you earn during your working life. The Social Security Administration keeps a record of how much you made every year, up to a ceiling of $128,400 for 2018. Again, this amount has been adjusted over time. Any amount you made over that annual ceiling doesn't get taxed by Social Security and does not figure into the formula. When it's time for you to apply for your benefits, the Social Security Administration will look at your highest 35 years of earning or substitute zeros if you didn't work for a full 35 years. They'll then apply a formula to arrive at your basic benefit, which is the sum that you'll be eligible to collect at your full retirement age. We won't go into the details of the formula, but you can find out more on the Social Security Administration's website, ssa.gov, if you are interested into diving into that complex calculation. We'll talk about spousal and survivor benefits a little bit later. I mentioned full retirement age in the last slide. Depending on the year in which you were born, your full retirement age will be between ages 66 or 67. For example, if you were born in 1951, your full retirement age would be 66. If you were born in 1956, your full retirement age would be 66 years and 4 months. Unless you are disabled, the earliest age at which you can claim Social Security benefits is 62. However, you'll not be eligible for your full benefit at that age. Instead, the Social Security Administration reduces those benefits by 25% if your full retirement age is 66, or 30% if it's 67. So, if your full monthly benefit at age 66 were $1,000, you'd only receive $750 each month if you started collecting at age 62. That reduction in benefits will be permanent. If you can't afford to wait until your full retirement age, you'll be eligible for 100% of your Social Security benefits. If you can afford to wait even longer, your benefit will increase by up to 8% every year until age 70 permanently. So, if your basic benefits were $1,000 at age 66, it would increase to $1,320 per month, or a 132% of your benefit. If you were born after 1942, you'll qualify for 8% credit each year. We'll discuss the pros and cons of several benefit strategies later on in the presentation to help you answer questions of when to start taking Social Security. One of the most common questions I get asked, and Jordan and the rest of the team gets asked, is whether or not you can work while collecting Social Security. The answer is yes. You can work and collect Social Security at the same time. One of the benefits of continuing to work is that you'll be eligible to increase the benefit you earn later in life. Here's the kicker though. While you are working, the Social Security Administration will reduce your benefits by the amount shown in the chart until you reach your full retirement age. So from ages 62 until full retirement age, if you earn over $17,400, you will lose $1 for every $2 earned above that limit. In the year of your full retirement age, if you have earned income above $45,360, you will lose $1 in benefits for every $3 earned above that limit. And as you can see, after you've achieved full retirement age, there's no benefit reduction, so you can earn as much money as you possibly can. Once you reach your full retirement age, the Social Security Administration will recalculate your benefit and give you credits for any benefits that were withheld. Usually, this results in a higher monthly payment. Depending on how much you're earning while you work, you may also be able to replace one of your lower earning years with a higher amount, thus boosting your benefit check even more. Because remember, it's based off of your 35 highest earning years. Starting with the month you reach full retirement age, you'll start receiving benefits with no reduction, even if you keep working. Keep that in mind, that you must pay Social Security and Medicare taxes as long as you are earning income. While I wish that retirement meant retiring your worries about taxes, that is unfortunately not the case. Some people have to pay federal taxes on their Social Security benefits if they have substantial income from other sources, like wages, investment income, rental income, or any other income that's reported on their tax return. This chart shows the income limits above which you'll have to pay taxes on your benefits. If you are married and filing separate returns, you'll almost certainly have to pay taxes on your benefits. The tax rate you'll pay depends entirely on your overall income bracket, since the Social Security is treated like ordinary income. However, according to IRS rules, you won't ever have to pay taxes on more than 85% of your Social Security benefits. We'll talk about some strategies to help reduce your taxes in the next section. Since your tax burden will vary according to your income, residence, and filing status, it's a very good idea to consult a tax advisor who can provide you with some advice on your situation. Now that we've covered the basics of Social Security, let's move on to some strategies that can help you maximize your benefits. One of the most important decisions that you'll have to make as a retiree is the choice about when to start taking Social Security benefits. Unfortunately, there are no easy answers, since it depends entirely on your personal financial situation. Retirees typically have three choices to file for benefits before their three choices to file for benefits before their full retirement age, in which case they'll receive a smaller check for longer to claim benefits at their full retirement age, or to wait longer to accumulate more credits. This chart illustrates how your benefits would be affected at different ages. Many Americans are forced to claim early benefits because they need the income. But if you can't afford it, delaying Social Security benefits could mean collecting significantly more over the course of your life. A good general rule of thumb is this: if either you or your spouse is expected to live past the age of 80, you're better off waiting to claim as long as possible to receive a larger benefit. If, for health or family reasons, you don't expect to live that long, you may be better off claiming a smaller check sooner. And again, a comment I like to bring up with a lot of clients when we discuss when to file is Social Security, another name is Old Age Survivors Disability Insurance. This is supposed to be viewed in part as insurance against living until, you're 100, 110, or, for some of you out there, maybe even more than that. But ultimately, it's a very personal decision that you may want to discuss, with your spouse or tax advisor in addition to us, and we're happy to run those numbers. As we mentioned earlier, you may be eligible for spousal or survivor benefits from your spouse. This chart shows how benefits are calculated under each of these situations. Divorced spouses are able to claim spousal or survivor benefits on an ex's record if they meet certain eligibility criteria. However, the new laws may complicate this picture, so it's very important to get individualized advice. So you can start receiving a spousal benefit when the primary worker is still alive and has applied for um, Social Security benefits. You'll receive a partial benefit if you're at least 62 years old but below, um, and spouse is 60 years old and will collect 32 to 49% of the full benefit, and you'll be eligible for maximum benefit if the spouse is at retirement age and will collect 50% of their full benefit. In terms of the survivor benefit, you can collect when your spouse is no longer living, and you'll be eligible for a partial benefit at age 60, and you'll collect anywhere from 61.5% to 99%. And you'll be eligible for the maximum benefit once you're at full retirement age, and then you'll be able to collect 100%. As you can see, that when you collect a benefit, it can have a major impact on how much your spouse will get each month. If you're married, it's important to consider your age and potential Social Security benefits as a couple to ensure that you maximize your joint lifetime benefits. Since a surviving spouse may need a survivor benefit for income, many couples also want to boost the value of their survivor benefit, which will include any delayed retirement credits and cost of living adjustments, or COLA. Usually, it's husbands trying to maximize the survivor benefits for their wives. When a spouse dies, the survivor can choose between his or her own benefit, a spousal benefit, or the survivor benefit, depending on which is the highest and what the survivor is eligible to receive. I'm going to reiterate the rule I mentioned on the last slide, and it bears repeating. Even if one spouse is expected to live past 80 years old, your joint lifetime benefits will usually be higher if the higher earner delays collecting Social Security until age 70. Delaying benefits may be even more important if the higher earner is significantly older than his or her spouse. The younger spouse will probably need to collect Social Security for years after the death of the primary worker. There's usually a question here, so I'll go ahead and answer it. You can't collect both on your own worker's benefit and a spousal benefit, because the Social Security Administration simply tax on the difference between the two. So if your personal benefit is $1,000 and your spousal benefit is $1,200, the Social Security Administration will pay your personal worker's benefit of $1,000 plus the extra $200. Hopefully that makes sense. I'll also mention that there are different rules for disabled survivors, survivors with dependent children, or dependent parents of deceased workers. If you have questions about those situations, it's best to speak to me after the presentation. And again, if you think of any questions as I'm going through the material, please feel free to write them down in the question and answer period. I'll also give some time at the end of the presentation if you want to just hold that thought and write it at the end as well. All right. If you've taken a look at your Social Security statement, you may have seen a line that reads, total family benefits cannot be more than X amount. What does that mean? Basically, this is the way that the Social Security Administration limits the amount that a family can collect on a single Social Security record. This is because Social Security doesn't want a family to get significantly more than a worker earned while employed. Generally, the family maximum is between 150 to 180% of the retired worker's full benefit. Family maximum restrictions generally only become an issue when there are multiple members of a family claiming disability, retirement, or survivor benefits on a single worker's record. For example, if a worker has minor children at home and or a stay-at-home spouse who is caring for those minor children. It also may be an issue if the worker dies, leaving dependent family behind. Family maximums do not come into play if it's just a worker and his or her spouse. They also don't come into play if both spouses are eligible for Social Security on their own records. And no, Social Security payments to your ex do not count towards your family maximum. If you're concerned about how this regulation may affect your family, please contact me after the presentation. Now let's talk about the changes to Social Security regulations that occurred in 2015 and what they may mean for you as an investor. On November 2nd, 2015, President Obama signed the Bipartisan Budget Act of 2015 into law. The new regulations significantly changed Social Security planning for millions of retirees. The changes mainly affected two strategies that help retirees increase their lifetime benefits. The strategy, File and Suspend, is one in which one spouse, typically the higher earner, files and then suspends a claim for benefits to allow delayed. Second option here is when retirees file for spousal benefits instead of claiming their own personal benefits, typically to allow their benefits to accrue credits while receiving some income. Together, these two strategies allowed retirees to claim income now and claim more income later. To put these changes simply, when the new regulations took effect, if you were younger than 62 at the age of 2015, you would not be able to receive benefits on a spouse's work record while your own benefits were suspended. If you were younger than 66 by May 1st, 2016, no spouse or child would be able to receive benefits on your record while your benefits were suspended. They ended up closing these loopholes. Under current rules, does that mean that couples shouldn't coordinate their claiming strategies to maximize their benefits? Absolutely not. In fact, making the most of your benefits is more important than ever, and couples will still be able to benefit from a range of claiming strategies. When you consider all the options, one spouse claims early, one delays, they both claim on time, etc., you'll see that there are hundreds of possible combinations to consider. I'll repeat what I said again earlier in the presentation. If both spouses are in good health and at least one could expect to live until age 80, they're likely better off letting the higher earning spouse delay filing to collect the delayed credits. We talked earlier about the tax treatment of Social Security benefits. Another way you can help maximize your income while reducing taxes is to take as much income as possible from sources that are excluded from your provisional income. Provisional income is the income that the Social Security Administration uses to calculate the taxation of your Social Security. The simplified equation on this slide shows how provisional income is calculated. I do want you to keep in mind that taxes are just one piece of your overall financial picture. It's important not to let your concerns about taxes overshadow other important issues. If you're worried about the effects of taxes on your retirement income, it's worth contacting me or another tax representative who can help review your circumstance and go over your specific questions. As you develop a Social Security strategy, don't make these critical mistakes that can rob you and your family of income. Ignoring spousal and survivor benefits, claiming too early, claiming too late, forgetting about earning limits, ignoring the impact of taxes, and not getting professional advice. I would emphasize that last point where this is a very difficult, complicated decision, and in a lot of cases, you only get one chance to get it right, so it's best to contact a professional to make sure that you're doing what's best for you and your family. I want to close this presentation of the section by saying this. No strategy can be right for everyone. As with most things in life, the details matter. Factors like age differences between you and your spouse, taxes, and life expectancy can all affect your overall outcome. Under the current Social Security rules, making informed decisions about when to file is critical to making the most of your benefits. Now let's wrap up and move on to next steps and questions. How can we help? As we wrap up this presentation, I want you to understand that the key to choosing the right Social Security strategy is to plan carefully and look holistically at your entire financial picture. One of the benefits of working with a professional representative is that we have the experience and tools needed to help you review your overall circumstances and run the numbers on all your options. I can provide guidance and help you analyze your financial situation, determine how much you can expect to receive from Social Security and when you should start taking benefits, develop a financial strategy to help meet your goals in retirement, as well as leave a legacy for the next generation if that's one of your goals. Evaluate advanced claiming strategies that can help maximize your Social Security benefits by helping to reduce taxes and potentially remove lower earning years from your record. If you need some help applying for benefits, I can certainly help you with that as well. All right, now I know we went over a lot of information and wanted to take some time now to answer some of your questions. I'll give each of you just a moment to type in any questions that you may have over the presentation, and then I can begin to answer some of the questions that we've already received. And also wanted to let you know that if we do not get to your question in this presentation, I will be able to get back to you either by phone or email with an answer. All right. While we are getting some questions coming in, I don't want everyone to be holding on the line, so I will just go ahead and share what we've already received. Okay, the first one is from Joan. Okay. I'm 61 and I was planning on taking my Social Security next year, but I will still be working part-time. Did you say that my benefit would be reduced? Yes, that is correct. There is a limit on the amount of money you can earn because you'll be below your full retirement age. So if you earn over $17,400, your Social Security benefit will be reduced by $1 for every $2 over that limit, because you would be age 62 in a year. So to put it simply, let's say you were supposed to receive $20,000 from Social Security over the course of the year, and you were expected to make $37,400 for the year, again, not including Social Security, which would be $20,000 over that limit that I mentioned earlier. In this scenario, your Social Security benefit will be cut in half, which is definitely, a big chunk. So you want to be careful, when you choose to actually claim. As far as your personal question, Joan, please give the office a call and we can discuss. All right, another one here from Carol. If my husband passes away, will I be able to get his Social Security benefits? You got it. Yes, you will. And I'm happy to discuss, your personal situation privately, but to help make this useful for the group, the general rule is that if you are at full retirement age, which you are, Carol, you'll be able to collect 100% of your spouse's benefit. There were a few other rules that I did mention previously in the presentation, but for length of time, wanted to make sure that we can keep the presentation moving. But I'll be sending a replay, so feel free to look at those answers. If you have any more questions, keep typing them in. Thank you. All right, I see that we're actually here at the bottom of the hour, and we typically like keeping these around half an hour. So I see that there are some questions that we have not been able to get to answer, and I apologize for that, but I will be getting back to you either with a call or an email with your answer. Just wanted to say, thank you to everybody again. And for those of you that are not currently working with us, we are proud to offer complete financial planning services. We give complimentary financial consultations, and we'll be able to meet one-on-one and discuss your current financial picture and gain a detailed understanding of which Social Security benefit claiming strategies may be right for you. Our services are not right for everyone, and we are selective about the clients we choose to work with to make sure that we're a good fit. Even though I'd like everyone to entertain the offer of at least having a review, you can view this as a second opinion, another professional just taking a look at the strategy that you already have in place. And we'll, during this presentation, just take a look and make sure that you're on track with your current goals. If you're doing this on your own, what will happen to your spouse if something happens to you? Does your spouse understand the difference between stocks and bonds, or how they relate to a well-balanced portfolio? Again, if not, we highly consider, seeking out a second opinion from us, and believe that you could benefit highly. And I make this promise to you as well. If after taking a look at your present portfolio, we agree with what you are presently doing, we'll tell you. However, if we see areas that need improvement, then we'll also tell you what those are and give you our recommendations on how you could be doing things even better. All right, folks. Thank you for sticking with us. This concludes our presentation today. And for more information and timely updates, please subscribe to our newsletter if you already aren't subscribed, and follow us on social media. We hope that you enjoyed the information we shared. And again, please don't forget to fill out the survey at the conclusion of today's webinar. Thank you very much and have a great day. Bye-bye.